But when you're a business owner, a lot of business owners are structured as LLCs that are taxed as S corps. And so I'll just use that as an example here. And so when you're an LLC S corp, you can pay yourself a combination of salary and profit distribution. But there's a lot of education that has to go into this, because when people that are coming from the corporate world for 20, 30 plus years, they hear salary and they think of salary and like, okay, I'm gonna, get a paycheck every 2 weeks, just like in corporate world. And really, for a lot of my clients, salary is just this this exercise that we do on paper once a quarter or once a year, where we essentially just pay payroll taxes on a portion of the profit, right? And so whenever you as a business owner want to take money out of the business, you don't have to wait for a paycheck. You can literally just transfer money from your business checking account to your personal checking account. And those transfers are going to be classified as distributions throughout the year. And distributions are what's known as that's an equity account. So that's not an expense. So a distribution gets posted to an equity account. So when you run a financial statement, when you run a profit and loss or an income statement, and you see the profit, you're not going to see the equity as an expense there. You're taking that profit out throughout the year as profit distributions. And then the main reason why one converts their business to an S corp for tax purposes is for one reason and one reason only: to save money in Social Security and Medicare taxes. And so if you were taxed as a sole proprietorship or as a partnership, then that entire profit that you're taking out as distributions, or you're taking a chunk of it out as distributions, that's all subject to both income tax, federal and state, depending on what state you're in, and 15.3% self-employment tax up to approximately the first 150. Then you hit the Social Security wage base, but there's no cap to the Medicare piece. And when you're S corp, you pay the Social Security Medicare tax on like a portion of that. I like to hover around 1/3. The IRS says you have to take a reasonable salary. So that's gray area. That's, so I'm always going to find justification to, take less than more, because that means less Social Security Medicare tax. And so all salary is in this context, is just working with your CPA to just look at your profit and be, all right, how much of this are we going to recharacterize as salary for accounting purposes, pay the payroll taxes on that, and then that's it. And then you continue to take money out just as you do transfers from business to personal, but you're paying self-employment tax 15.3% on approximately, let's say, 1/3 instead of all of it. If you're making like a net profit of like 150, 200,000, that could be like a $10,000 to $15,000 tax savings in Social Security and Medicare year after year after year.
There you go. And that's real money, as my mom says. Oh, Maggie, that's real money.